Welcome, everyone. My name is David Weinstein, Director of the Center on Japanese Economy and Business, which we call CJEB at the Business School. I am joining you from London, where I've been on sabbatical leave as a visiting professor at the London School of Economics. On behalf of the Center, I welcome you all to today's webinar, COVID-19, Economic Implications for Japan and the United States, which is co-sponsored by CJEB, the Japan Society, and the APEC Study Center. We sincerely thank you for joining us today, despite this current situation with COVID-19 and the adversity we are all facing throughout the world. For this timely discussion, we are glad to have a panel of high-profile individuals here today, who are all longtime friends and big supporters of CJEB. Glenn and I worked together at Columbia, and I have known Kono-san since he was here in New York at JETRO. I want to send my special thanks to Tashiro-san, who is joining us from Tokyo late at night. Tashiro-san was supposed to be a panelist in our annual Tokyo conference in May this year, but unfortunately it had to be canceled due to the pandemic. But I am so glad to have her with us today. The Center is also delighted to have Professor Yumiko Shimabukuro as a moderator for today's webinar. She will be introducing the panelists, so I will introduce her first. Professor Shimabukuro is the director of the Urban and Social Policy Concentration for the Executive MPA program at the School of International and Public Affairs, and serves as the faculty director of the Global Leadership Development Training Initiative. She is also a co-founder of the new initiative, the Japanese Management Leadership Program at CJEB. Before I give the virtual microphone over to Professor Shimabukuro, I would like to first take a moment to thank all of CJEB's sponsors who generously support us, both before and during this unprecedented crisis. Now, Dr. Joshua Walker, President and CEO of the Japan Society, would like to say a few words. Josh?
Thank you, David. And it's great to be with all of you and over 500 viewers that are joining us today. It's kind of a marvel that we're able to connect from Tokyo to London to New York and DC to have this very important conversation. I'm simply here to say thank you to Columbia and the entire team over there for co-sponsoring this. In some ways, this will be even more exciting to get perspectives on the ground on a timely topic that we all need to have. I want to thank our sponsors as well, the global leaders and corporate levels. But without further ado, let's turn it back over to get started the conversation. Thanks for joining us.
Thanks very much, Josh. So Yumi, would you like to take it on from here?
Yes, absolutely. As Dr. Walker said, I'm really delighted and honored to be moderating this distinguished panel today. And David, thank you very much for the wonderful introduction. Now, a new poll just found that 9 out of 10 Americans fear economic collapse. We just heard this morning that the GDP of the quarter has fallen by 4.8% or so. So this is a very timely issue. My task today in the next hour is to deconstruct the economy. There are many layers and segments from the small businesses, technology implication, labor market. We are going to get this done today in 1 hour. And as Dr. Walker said, welcome to all the viewers. As you can see, there is a chat box function in Zoom. I welcome all of you to write in your questions. We have already actually collected some very enthusiastic viewers' questions already. So welcome everyone. Now, all of you have the speaker's bio, so I'll keep the introduction really short. Our first speaker, Dr. Glenn Hubbard, is Dean Emeritus, Director of Jerome A. Chazen Institute for Global Business, and Russell L. Carson, Professor of Finance and Economics at Columbia Business School. He has written extensively on various topics, over 100 scholarly articles, and multiple very influential books. Our second speaker, Mr. Takeshi Komoto, joining us from Japan, is the minister at the Japanese Embassy in the United States. Previously, he was the managing director for multilateral trading system at METI. His portfolio covers a wide range of policy areas that include, of course, trade, business strategy, as well as energy. So welcome, Mr. Komoto. Our third speaker, Ms. Keiko Tashiro, is the Deputy President of Daiwa Securities Group. Her career spans across 3 decades, very impressive, in really core in the Daiwa Securities. And she currently serves as a member of the World Economic Forum's Global Future Council on Financial and Monetary System. So I welcome all of you. And on that note, Professor Hubbard, I turn it over to you.
Thanks so much, and thanks for having me, and thanks to everybody who's joining on Zoom, which is where I guess we all live our lives these days. I wanted to break up my remarks into really 3 parts and spend increasing amounts of time as I go. 1, the pandemic, 2, the shutdown, and 3, the emerging economy and opening economy, which I think will be the toughest. February of this year seems like a lifetime away. You already heard about the GDP numbers, which came out this morning. That's only the beginning of a very, very sharp downturn in the US economy. For most people in the world, this is very unfamiliar territory. Even the global financial crisis would pale by comparison with what's happening to employment and output declines, largely because of a shutdown, which I'll get to in a moment. That is something that policymakers are really grappling with. They're facing forces more akin to the Depression than anything we've ever seen. The way I like to think about it, excuse me, from an economic perspective, is there's really 2 curves. One is a curve about infection and healthcare. Obviously, you want to bend the second and first derivatives of that curve as fast as you can and then bring the level down. That's what health policy is trying to do. In parallel, there is a curve for the macro economy. And in the near term, the faster we bring down infection rates, the greater is the near-term macroeconomic cost. In the period of the shutdown, I like to think of the shutdown and recovery as being like a Nike swoosh sign. I know people talk about V's and U's and L's and W's. To me, it's a Nike swoosh. The downturn is clear, living through it now. The checkmark upturn will happen as the recovery takes place. And there's a role for policy, both now in the period of the shutdown and going forward. Right now, central banks and fiscal authorities around the world have been extraordinarily active. Before I may say some things that they're not entirely exactly right, it's important to note that policymakers acted very quickly this time compared to the global financial crisis. In the United States, both the government and the Fed dithered for a while before acting in 2008. That has not happened here. Like it or not, the policy responses have been very large. I think fiscal policy has been rightly focused in the US on trying to keep employment relationships and business continuity intact under the theory that the short run is really the period over which the shutdown will occur. We're not dealing with something forever or even very long term, and so this continuity makes sense. The cost of that is very large. Already the US has approved plans for more than $2.5 trillion US dollars. At the same time, the Federal Reserve, the US Central Bank, has been very active in buying all manner of market securities to make markets. That, in a sense, is what a central bank should do. But it has also bought securities that some economists would say look a little bit more like fiscal policy. Less rated corporate debt or municipal debt, or standing up a small business facility, which could be very risky indeed. To me, the biggest challenge for the economy and policy in the US and globally is the reopening. And here, people tend to think of this as a 0-1. The economy is closed or open. That's not how I think about it. Any reopening in any industrial economy is going to be gradual and will require some policy support for workers and for businesses. And a lot of it will be driven less by regulation and public policy and more by what consumers feel comfortable doing. So I think that recovery will be slow. It's hard to see the level of US GDP recovering to its February level of this year for a couple of years. And I think fiscal and monetary policy will have to be vigilant in that regard. Just a long-term observation, and I'll wrap up. The world may change in some very important ways. Travel may be a very different industry than before. The way in which we communicate for business, much as we are doing right now, may be different from before. In the world close to home, for some of us on the call, in the university, the way we talk to students and each others will change. Those are the longer term things that I think policymakers will have to think about and business people will have to think about. Because from a policy perspective, you don't necessarily want to put the world back to where it was, because it may be a very different place. So I'll wrap up there.
Now we have our next speaker, Mr. Takeshi Komoto. I hand it over to you.
Thank you, Shimabukuro Sensei. Hi, my name is Takeshi Komoto, Economic Minister at the Japanese Embassy based in Washington, D.C. First, I would like to thank all the organizers for having me with this very distinguished guest, panelist. So first, let me start by sharing with you the situation in Japan. Japan is also facing a difficult time, a very challenging time, both in terms of public health and also in terms of economy. And the forecast doesn't look good either for some time to come. So in the monthly report on the economic status of Japan that was published last week for April, Getsubei Keizai Hokoku, the government downgraded its key assessment for the second straight month. And it is the first time for the government to use the word worse or worsening in its monthly report since May 2009. So what is the Japanese government doing? First, stop the spread. The government issued an emergency declaration on April 7th, initially covering Tokyo and 6 other prefectures. And now it is expanded on April 16th to all 47 prefectures around the country. And like in the US, the government asked people to stay at home and decrease the number of contacts with other people by 70% at a minimum, and ideally by 80%. And this declaration will stay in effect until May 6th, and Prime Minister Abe will need to make a decision whether to extend this declaration beyond May 6th, listening to his to the advice of his health advisors. As of April 29th, the number of deaths in Japan is 389. I'm sorry to the people overseas and to their beloved families, but this number is relatively low compared to other major countries. For example, Maryland, the state that I live in, it has a population of about 6 million people, which is less than 1/20th of population of Japan. Records the death toll of 929 as of yesterday. So it is pretty low. But we are seeing in Japan a surge in metropolitan areas in Japan, in particular in Tokyo. So you have to stop the spread, period. This Golden Week, which started yesterday in Japan until next week, about 12 days in period, this will be a challenge to Japan and its people. Whether people can stay at home or not will make a huge difference. For the economy, the Japanese government put together a stimulus, economic stimulus package to first to stop the spread, protect our jobs, business, and people, as well as to recover our economy once the crisis is over. Sorry, let me share with you one slide. I'm pretty getting good at this, using Zoom to show slides with all the webinars that I attend. So this is kind of the overall picture of our economic measures. The size of the package is $1.1 trillion, which is about 20% of our Japan's GDP. And we estimate its impact to be 4.4% of our real GDP. And the package will hopefully be approved by the Diet in Japan tomorrow. The package has two main pillars. One is emergency support, and the other is V-shaped economic recovery. And the emergency support pillar has two parts. One includes medical programs to stop the spread of COVID-19, to build medical capacity and develop medicines and vaccines. The other part includes programs to protect jobs, SMEs, and our daily lives. The V-shaped economic recovery pillar has also two parts. One includes stimulating demand of severely hit sectors such as tourism and other service sector, and the other includes programs to strengthen the Japanese economy, such as by accelerating digital transformation of our economy. It is the pillar 4 in the box. And let me share with you two things about our Japan's package. One is that this package already includes the budget for programs to boost and recover our economy once the pandemic is over and when we are ready to open it. This part of the package is to some extent like the stimulus package discussed in the United States as phase 4. So we have already included that part in this package. And the second is the approach to protect jobs. In the US, to my understanding, usual practice that firms lay off workers in difficult time and workers apply for unemployment insurance. But that is not the usual case in Japan. There is a social and corporate culture to protect jobs and not to lay off workers easily. So we have a program called Employment Adjustment Subsidy Program. It basically subsidizes companies facing difficulties to keep workers employed rather than laying them off. So the Paycheck Protection Program, the PPP, which was a part of the CARE Act in the United States, I suppose it's not a common program in the United States, but it resembles our Employment Adjustment Subsidy Program, which I thought it was interesting. So the next focus for Japanese people is whether the emergency declaration will be extended beyond May 6th. When to reopen the economy is a big issue in Japan, just as in the United States, as Professor Hubbard described. It's not an easy question, so Prime Minister will listen to his health advisors and make the decisions in the coming days. And I just saw on the web news that he may decide on May 1st after listening to the advice from experts. In closing, I truly hope that we will overcome this crisis very, very soon. Thank you very much. Shimabukuro-san, back to you.
Thank you very much, Mr. Komoto. Ms. Keiko Toshiro, would you like to?
Yeah, sure.
Thank you.
Okay, so thank you very much for having me. It's a great honor to be back with my old friends, Japan Society and Columbia University. Both are very dear to my heart when I was living and working in New York until a few years ago. So being the only one on the panel living in Tokyo right now, and it's 11 o'clock and it's a holiday, so I have all sorts of excuses for not performing, but I'm very conscious of how Japan is being portrayed in the media in the US. And so it seems like there's two things. One is that the half-hearted practice of social distancing in Japan is a bit, it's very different and concerning. And number two is the low level of PCR testing and the medical system that is on the verge of collapse. But to be fair, as Mr. Komoto mentioned, the number of deaths in Japan so far is quite low. but I wanted to give you a bit more color of what it actually is like without trying not to repeat what Mr. Komoto just mentioned. So when Mr. Abe declared a state of emergency for 7 prefectures on April 7th, he went out of his way to inform us that this would not be like a lockdown that you've been experiencing in New York or in other cities in Europe. And so that, I think, means that the government was very conscious of the fact that the spread of the virus will be a negative effect on the economy. And as Mr. Komoto said, we were told that we need to reduce physical contact with other people by 80%, 70% at the least. But in reality, what is happening is that, with the exception of large corporations, many companies are not prepared to move to work from home. Though the trains are not as crowded, by far not as crowded, because there's 60–70% less. It is not, you cannot say it's social distancing. There's still quite a number of people riding trains. Smaller restaurants are still open. Some of them you can actually eat in. Some of them are just delivery, takeaway. And though most non-essential shops are closed, supermarkets in Japan, and especially in Tokyo, are very small. So there is no social distancing being practiced at these stores. As Mr. Komoto mentioned, Golden Week is a great opportunity because people don't commute to try to lessen the contact. Today was the first day of Golden Week. In my neighborhood though, in the parks, Yoyogi Koen is quite nearby. It was pre-packed, and the supermarkets were actually more packed than a usual holiday. So this is the reality right now in Japan. And in the meanwhile, small businesses, restaurants, shops are struggling to survive. And as Mr. Komoto mentioned, the government is putting a supplemental budget in place, which will hopefully pass the diet tomorrow. And one which Mr. Komoto didn't mention was that everybody's going to get $1,000, including myself, in addition to the subsidies that SMEs and for local governments. But my main concern is that the timing of when people will get the money. I think that in Europe and like in Germany and the US, people got their money in 2 or 3 weeks' time. In Japan, people are talking about it might take up to 2 months. The earliest is probably mid-May to majority late May. And people can't wait to get their money because the application process is complicated and messy, and sometimes you actually have to show up in person. And and for the $1,000, we don't have a social security number system, and the government doesn't have our bank details. A lot of people don't pay taxes because we have a withholding tax system. It's going to take time. So my main concern is what the government is preparing right now going to be enough at the right time? And that's it for me for now. Thank you very much.
Wonderful. I think the next 30 minutes or so, the segments are divided into 2 parts. The first part will be a discussion moderated by me. And the second part, the last 20 minutes, it will be all viewers' questions. So I encourage all of you to write in the chat box your comments or questions. Now, all of the panelists mentioned something about fiscal policy and government intervention. Big question, is government doing enough? In terms of small businesses, obviously this is a sector that was really hard hit. Are there any other policy instruments that could be used to rescue small businesses or employment? Ms. Toshiro, you mentioned about kind of redistribution policy. So if all of the panelists could be sort of mention something about their wish list in the policy, what more would you like the government to do? That'd be great. So let's start off with you, Professor Hubbard.
Well, I do think while in the US, the federal government's been very active, it hasn't completely done enough. And I say this for a couple of reasons. One, there's been very little aid to states. The US has a federalist system, and a lot of burdens of healthcare are borne by US states, not by the central government. And I think there is a need for block grant support for states for public health infrastructure and for the pandemic. I do think small business assistance has been good, but the administration of it needs to be better. It was done through the banking system, largely because of a view that it was hard to stand up a new government entity fast enough, and banks have familiar relationships with small businesses. I think our Treasury Department, the Small Business Administration in the United States have not done a very good job implementing that program. So I think while Congress has put more money into it, implementation needs to be better. I think the hard thing, as I mentioned in my remarks, is once the formal shutdown is over and we're in a gradual reopening period, what's the right way to think about supporting businesses? I don't think it's simply just making more loans to them. They're not going to be able to repay those, nor is it indemnifying on all their revenue. So the question is, what kind of programs, things like partial wage subsidies. In the US, there is an analogy to Japan's labor programs in something called short-term compensation. It's long been part of the unemployment insurance system, rarely used, but it would be a way to do more gradual subsidies for small business and other employers. So I do think there's more to be done there. The Fed is so aggressive, hard to imagine it could do any more than it's doing.
Thank you. Mr. Komoto or Mr. Shiro?
Yes, thank you for the question. So in Japan, 99.7% of companies is SMEs, and 70% of the workforce work for SMEs. So it is very important to have vibrant SMEs in Japanese economy. So this economic stimulus package that we put together have many programs to support and help SMEs. For example, severely injured SMEs can receive financial support immediately at a maximum of $20,000. This may be like, in some sense, the grant under the Economic Injury Disaster Loan, EIDL, in the United States. But in our case, we do not have any restriction on what they spend on. The second is we have enabled SMEs to borrow money, basically with zero interest rate, even from private banks. And third, if SMEs in difficulties do not lay off workers and protect their jobs, this is the program that I mentioned as a employment adjustment subsidy program. They will be subsidized 90% of the leave allowance that they will pay to their employees. And fourth, very importantly, this is something that Tashiro-san mentioned, is about the simplifying the application procedures to get money out to people as quickly as possible. So for METI, where I'm from, we are aiming to get the money out in about a week or two at a maximum for SME loans. So the government will implement these initiatives and programs to help support SMEs at top speed. And of course, if this situation prolongs and gets worse, as necessary, we will consider necessary next steps and actions.
Thank you.
So I think I would just like add to Mr. Komoto-san, and he did mention that there are various programs run by various ministries, and it's sometimes confusing. And if everybody stand up like his ministry to quicken things up, that will be great. But there are bottlenecks, not just in providing money, but also in testing and everything. And I think the one thing that Japan is missing right now is clarity of where we're going, when we will stop lockdown, where are we hitting the top, are we not hitting the top, which direction we're going. There's a lack of information coming from the government, and the people are not sure if they want to continue on with their company, or some companies are actually thinking of giving up because they were in a tough place to begin with, because they were not lack of workers. And as I think Professor Hubbard mentioned, even if they do borrow money or get money, they might not be able to return it. So I think more clarity and certainty where it's available would be very helpful.
Thank you very much. Now, some of our viewers and myself, we're a little bit worried about the public debt. So in other words, maybe the government might be doing too much, especially in the case of Japan. In the case of the United States, the public debt is not as engorged as the Japan case, but it could be a sort of a long-term concern. All of the panelists, feel free to chime in on this big issue of public debt.
Well, I think you have to break it up into two parts. I mean, the first is the incremental borrowing to fight the pandemic, and then the underlying fiscal issues. I would think this both for the United States and for Japan. In terms of borrowing money to fight the pandemic, that's like fighting a war. In World War II, US GDP, and the deficit relative to GDP and debt relative to GDP rose to unprecedented levels. And it took the economy many years to right that ship by not spending the additional resources and by growing. This is one-time borrowing too. The war is a pandemic. And I think it's fine for the government to do what it's doing as long as it's being efficient in so doing. Having said that, there were underlying fiscal problems before the pandemic. And this certainly shouldn't be the occasion to think of new ongoing expenditures just because it was easy to borrow the very large sums that both Japan and the United States are borrowing to fight the pandemic. So I don't think the fiscal questions have gone away. Both the US and Japan have been able to shoulder quite substantial large debt burdens, and both countries are helped by financial repression for public finances. Interest rates are very low. Debt service costs are very low for central governments, even when the borrowing is high. So the fiscal problems are there. I wouldn't be too critical about the pandemic. And frankly, I would expect in both countries that part of that cost will be money finance.
Thank you very much.
It's a very, very difficult question for Japan. I think as many viewers know, the Japan's government debt ratio is 237.5% in 2019. So of course, there will be a huge impact on our budgetary situation of the Japanese government. But what we are aiming to achieve primarily balanced surplus in fiscal year 2025. But that was before this crisis. But I believe that this thinking of the size of this negative impact on all parts of the economy is too risky to shy away from taking bold measures to support the economy. I think we learned important lessons from the experience of Japan's bubble burst, like global financial crisis. And Cabinet Secretary Suga was asked the same question actually last week in a press conference, and he answered, there will be no fiscal consolidation without economic growth. We will take every measure to stop the spread and recover our economy. So, of course, I believe every country needs to revisit their fiscal consolidation plan once this pandemic crisis is over and when we recover our economy. But now I think we need to prioritize the recovery of our economy.
So I think I'd just like to add that I think the money that the government is using is not as for the pandemic. It's something to fight the pandemic. It might end there, but for other uses, I think it has to last in terms of trying to make our the white collars more efficient and to get rid of some of the bureaucratic things that are taking time or using people additionally or using space in this middle of Tokyo. I think those are the things that would have taken maybe 5 or 10 years if there was no pandemic. Actually, we might be able to do it in a year. And I think that would make up for some of the money that the government has to use to fight the pandemic and get the country running again.
Thank you very much. Now, in terms of sort of policy in general, we have this thing called Abenomics. It has somewhat struggled to achieve its stated goals for some time. Mr. Komoto and Mr. Shiro, how might this COVID derail or potentially affect these arrows of Abenomics. And Professor Hubbard, if there's any economic reform currently or prior to COVID that was taking place that might get derailed as a result of COVID in the next 2 or 3 years, I would also love to hear your take on it. So for the Abenomics question, perhaps Ms. Tashiro, you can sort of kick off the answers. Thank you.
Okay, so I think it's like sort of continuous of my answer before, because I think Abenomics, especially the third arrow, which really never happened or only partially happened, this is a perfect time to actually get the restructuring, reorganization, and deregulation going. One example that I can give you is that if you lived in Japan or know Japan, there's a hanko, like a stamp culture, where you have to rubber stamp everything, not rubber stamp, but stamp everything, which is one of the reasons why people actually have to show up to the office, because they need to physically stamp it. The government now is saying that we will get rid of it and try to get everything online. Right now, for like medical advice, first-time medical advice, you cannot have online, but now because of the COVID, you can actually get medical advice even if it's for the same time. People actually in Japan, if you feel ill, some people don't actually, they come to work just for the sake of coming to work and saying, showing their royalty, but now people don't have to come to work and they are getting used to it. They don't have to come to work, they can work from home. A lot of the things that have stopped the third arrow was not because of technology, although it has something to do with it, but a lot of it is psychologically, mentally, people not wanting to go through with the digital transformation. And I think this is the perfect time to actually get the third arrow going. So there is some good in this pandemic, I think.
And certainly with women's economic inequality component, the work from home, giving women more greater flexibility could also be something that could be reinforced as we go through the digital transformation. So thank you, Ms. Tashiro. Mr. Komoto, would you like to add anything to her comment?
Yes. Well, first of all, as a government official, I don't necessarily agree to the statement that the Abenomics did not achieve its stated goals. But it is absolutely true that we are facing a big challenge right now. For example, Japan was supposed to host Olympic and Paralympic Games in 2020 and welcome 40 million travelers, guests from all around the world. But obviously, this is a very difficult goal to achieve now. And I agree with Tashiro-san that we can take advantage of this opportunity to make things and make the society better. As I mentioned in my opening remarks, the economic stimulus package that we put together includes budget to boost and strengthen the Japanese economy, such as to accelerate digital transformation, as Tashiro-san mentioned, transformation of this economy in line with Abenomics, in particular the third arrow. This is a good opportunity to build a society economy with more using more remote control with automation technologies and robotics. This is a good opportunity to develop a more efficient online education or online healthcare. The latter needs careful steps, but it's a good opportunity to see how far we can go. And I think I heard from my friends in Japan that they are using less cash and using more e-payment methods. This is something that we tried to do before the crisis with limited success, but now people are using more online and e-payment payments. And I think this is a good opportunity to rethink how we work. Again, Tashiro mentioned using telework. So we definitely should take advantage of this rare time to enhance and upgrade our society. Thank you.
Yeah, if I could jump in on that, I couldn't agree more. I think that we definitely have an opportunity here, both in Japan and the United States, to accelerate structural reforms And I think I agree with the points being made that some of this will require a little bit of a pivot in policy, that regulation needs to be more welcoming. For example, many US officials have asked me, how do you reopen small business and restart small business? And part of my advice is less about money and more about deregulating, making sure that it's easy to start a business. I think the same is true in the third era of Abenomics. So I agree, this is a focal point. While there's much that's unfortunate about this crisis, let's grab the focal point for change.
Thank you very much. Now, Mr. Komoto mentioned about AI or robotics maybe intensifying in terms of its usage. And now the other side, the labor, we may have to worry about this particular component, given that during the Great Recession afterwards, we call this, I think, hysteresis, where the jobs were permanently lost. Professor Hubbard, are you concerned a bit again that this might happen?
I am, but I think there are ways to go against it. Part of what we've seen in the transition that industrial economies generally have been going through is a transition toward a service economy with a different set of skills than many traditional economies had. Both Japan and the US have faced this transition. In the US, I think there's much more that needs to be done to help people with retraining and skills. In the US, that's really a story about community colleges, about state universities, working with local businesses. And I think that that was true before the crisis, but is all the more true now.
Thank you. Mr. Shiro or Mr. Komoto, would you care to?
Okay. So let me share with you an interesting fact. First of all, in case of Japan, comparing to the US, we did not face a high rate of unemployment during the global financial crisis in 2007 to 2009. This is, I think, due to the social tradition of our employment system in Japan, not laying off workers, and also the employment adjustment subsidy program. But the unemployment rate in Japan before the crisis was 3.7% in July 2017. And it did go up, but it only went up to 5.5% in July 2009. Whereas the US experienced a high rate of unemployment of 10.0% in October 2009. So there is a difference in the, I think, the labor market and the structure. But having said that, of course, the economy is in a bad shape, we know, and we are now responding to those issues and problems with the stimulus package that I described. But if we need to do more, we need to think of necessary actions. But one may note that a shortage of labor that existed even before COVID crisis, which was quite severe in Japan, may mitigate the unemployment situation in Japan. I might want to ask Professor Hubbard about comments about this, but relatively speaking, the companies may not have the need to lay off workers because they were short of employees in the first place. And I think many companies, in particular SMEs, will be and are reluctant to lay off workers because they are afraid that they will not be able to rehire them once the economy picks up. So maybe a little bit sort of a tricky or unique situation in Japan, and we have to see. Thank you.
So I think from my part, because we were talking about digitalization, the resistance coming from a lot of workers, the older workers in Japan, towards digitalization is that they were not skilled to make that change. And I think what we need to do is reskill these workers so they feel more comfortable about the change in society. We haven't really, maybe no country up to now has been able to sort of come up with a program to reskill these workers. Maybe it's not actually a one-term reskill, but if we're going to live until 100, we need to reskill workers 1 or 2 times. And I think we need to come up with a structure that does it in a very in an efficient way.
And this really is very challenging, especially for Japan and the United States, where we don't really have active labor market policy tradition like in Northern Europe. So this is definitely probably going to be one of the core agenda for the governments on both sides moving forward. And it would be interesting to see what the local governments might play a role in this area as well. I want to pivot our question and go zoom in into sectors, because some of our viewers are asking about maybe which segments of the financial sectors might be hard hit by this potential crisis that about to come. Will there be bank insolvencies like we saw during the Great Recession? Mr. Shear, would you care to respond to this question first?
Okay, so I think that the big difference between this COVID and the financial crisis is that the financial system itself is actually quite strong right now, and part to do with the regulations like Dodd-Frank or European regulations that made the banks stronger. Probably if we're talking about the financial industry, it would be more like the hedge funds or the private equity or the more leveraged non-bank sectors that have a lot of debt and have a lot of assets that they need to get rid of, and a lot of the assets are actually illiquid. So that is where in the financial sector that we need to watch out for.
Mr. Komoto or Professor Hubbard, would you like to comment? Or
I would agree with that. I think that the financial sector is in much better shape now than it was going into the global financial crisis. Having said that, financial share prices are down relative to overall stock prices, and I think that is a concern for market participants about the potential for credit losses for banks, for insurance companies, for finance companies. I do think, at least in the US, there is a pocket of weakness in some of the non-bank financial institutions. I'm thinking of mortgage servicing, for example, that because of regulation was pushed out of banks into the non-bank sector, and many of those firms have lacked the capital during this period, so that there may be some need for change. But overall, whereas last time was a financial shock that spilled over into the real economy, this one was a real shock. So far, it hasn't spilled over too much to finance, but the jury's still out.
Thank you. Now, yes.
I don't have much to add, but maybe because I'm from the Ministry of Economy, Trade and Industry, one thing that bothers me recently is the recent drop of oil price, and we are looking paying close attention to what that will impact the global financial markets.
Thank you. Now, our viewers are also asking about different types of investment, more on the foreign direct investment side at the global level. Many of the major cities across the world has been the absorber, right? And now cities are associated with the outbreak. So one of our viewers asked, what does this mean for cities, not just the US cities, but also Asian cities that potentially could dampen the foreign direct investment flow? Big question mark.
Well, it's a great question. I don't think we really know the answer. We know that cities have been resilient to past disease outbreaks, both in deep history and in the past 20 or 30 years. I think cities remain a very attractive place for complementary skills. Having said that, I do expect some changes. I expect that how offices are laid out, the amount of time people spend physically in an office and not, those are things that could well change, even in cities. And some of that will be capitalized into rents for people who own commercial office buildings and things like that. But maybe it's because I live in a big city, but I still think cities are going to be relatively attractive in the new environment.
Perfect, thank you. Mr. Shiro?
So I totally agree with Professor Hubbard. I think the way that cities, the function of cities might change because people might be working remote. In Tokyo, we might not need big offices in Tokyo. We might have more satellite offices throughout the country. So that might affect real estate prices, that might affect commercial prices, residential prices. I think we need a bit more time to actually review of how severe the effect of the virus will have on the cities in terms of their functions.
It's interesting that in cities you would think that social distancing is more difficult, but as Professor Hubbard mentioned, they can be very creative. And I've seen so many pictures of, even within a factory, within an urban center where you have these plexiglass and, people wearing different types of suits to overcome this challenge. So it'll be interesting to see how innovation could take place within this realm. Now, Mr. Komoto and others, I would love to hear your thoughts on the global supply chain. Obviously, this is something that cuts across national borders. It's a driver of large part of international trade and world production. Now, with the slowdown of the Chinese economy and this outbreak, what does this mean for the future of global supply chain in terms of maybe production in particular sector or just the overall, like the big picture? Mr. Komoto, let's probably start off with you. Yeah.
Okay. Supply chains. So there's a lot of, I think maybe some of the people who sent this question is thinking of the discussion and the supply chains discussion in Japan, how to diversify. So there's a lot of discussion in Japan about how to build a resilient supply chains to protect against various risks. And I don't think there is a clear answer. There will be a clear answer to this, but I think one of the ways is to diversify the supply chains. And in the economic stimulus package that put together, it includes a program, budget for a program to diversify supply chains. But please do not get me wrong, and the media, many medias are misleading. We are not protectionists, so we are not saying that companies need to close down factories in a certain country and bring them back, relocate them in Japan. We are supporting companies to diversify their supply chains, adding other facilities in third countries, and so forth. So we believe, and we experienced, first of all, we experienced this challenge when the US and China tension rose since the President Trump administration. And a lot of companies were already thinking about this, but this coronavirus, this supply chain disruption made them really think hard about how to make it resilient. And I think one of the ways, again, is to diversify, and this Japanese government will support that effort. Thank you.
Now, in terms of, Mr. Komoto, you mentioned the word protectionism. So I want to ask Professor Hubbard and you, could this unleash this COVID, especially with the exports, potentially restriction of exports of essential medical goods, could this unleash a new sort of protectionist policies or maybe greater protectionism in the future?
I think it could, and that would be unfortunate if it did. I mean, one of the defining features of the pandemic, any pandemic by definition, is it's a global phenomenon. And it's very important to have global cooperation, not simply walling off, whether it's essential medicines or elements of a supply chain or trade in general. To me, there are two issues the pandemic raises. One is about how to have a different global supply chain. I don't think it's about whether your supply chain becomes domestic instead of global. It's more a matter of redundancy and diversification. You know, for any business, you don't want to be overly dependent on a particular supplier. It could be China, but it could be something else. The other point is about the boundary of a firm. You know, in economics, it's an old question, what defines a firm? Well, it's the essential activities that are typically done inside the firm, and other things are contracted out. I think there's a real question many businesses will have for business purpose, whether they've contracted out the wrong things. So I think there'll be a rethinking. What's unfortunate in the United States is there is a protectionist streak. And unfortunately, when people say they like things to be bipartisan, this one is bipartisan and it's wrong. And so we do have an anti-China bias. China is a bad actor in some ways on the global trade stage, but that doesn't mean that a protectionist policy is in the nation's or the world's interest. So, you know, to go back to where I started, I think cooperation should be the order of the day, not walls.
Thank you.
If I may jump in. So it is understandable for a country to take measures that prioritize its people first during a crisis, as long as they are minimum necessary and temporary. And they must be removed after the crisis is over. Last week, the WTO, World Trade Organization, issued a report saying that 80 countries put in place some kind of measures to ban or restrict exports. And I am proud to say that Japan is not one of them. We believe we may need to control the flow of people in this crisis across borders, but we do not believe, and we should not restrict the flow of goods and services across borders. So again, the countries that took these restrictive measures should remove them immediately once the crisis is over. And otherwise, my country first policies and trade protectionist measures will stay in place, and we're afraid that it will be reinforced beyond Corona crisis.
Wonderful. Now, I think we only have one more question. We only have 3 more minutes, so I'll make it quick. There seems to be a sharp division of opinion right now between Wall Street and economists. When you hear economists, it's like, well, it's going to be as bad as the Great Depression, potentially. It's going to take years for recovery phase. And Wall Street seems to be trading at a much higher level. At least it hasn't sort of tanked and crashed and stayed low. Is this because of valuation, tech companies rallying behind the scene? What is this sort of Wall Street somewhat versus economists that you might, what we observed today? Mr. Shiro, would you like to, Professor Hubbard, please.
Well, just quickly on that, I think that the stock market obviously is very forward-looking. And 2 things are interesting in the US in that regard. One is the Federal Reserve's interventions will reflate asset prices more surely than they will reflate the economy. The other thing to remember is, at least for the United States, the stock market doesn't stand for all business. We're in a world where, for a variety of reasons that have been accentuated by the pandemic, there's increasing concentration and profitability of some large listed firms. So don't confuse the stock market value with the underlying health of business.
That's an excellent point. Mr. Shiro?
So I think the Bank of Japan is playing a similar role, maybe to even more extent because they've been buying equities for quite a long time. And so the concern is when is it going to exit what it's purchasing right now? And I also think that because corporates are because of most of the COVID effects have been felt after April, and we like transportation, tourist industries will suffer greatly. And I think when we see the results, some companies will suffer more than others. But as I do agree with Professor Hubbard in that we don't actually, it's very difficult to measure the severity of this economic collapse just by looking at the equity market.
Fantastic. I think our time is up. I would like to thank all of the distinguished panelists today for this really rich, insightful session. And on behalf of the Center of Japanese Economy and Business, Japan Society, and APEC Study Center, I would like to also apologize that there seems to be some audio technical issue in the beginning. So CJEB and Japan Society will be posting this webinar, a more clean audio version in the next few days. Now, I want to thank all of the sponsors, the organizers. You guys have been amazing. And thank you again for the panelists for this wonderful session. Bye.
Bye.